Hello, Master Traders. Dr. Daniel Daves with you. It is Thursday, June 7th, 2018. Welcome to the Trading Room. Tonight we are looking at the S&P 500 daily chart. What do we see in this chart? We see a perfect, beautiful couple of moves. I do anyway. Matter of fact, let me point out one here that just happened a few days ago while I was traveling. I'm hoping that you might have seen this and were able to take it. We're looking for channels, and here we had a beautiful, get my pen here, a beautiful entry. 1, 2, 3, 4, and bang, 5 outside the line. Anything outside the line on this daily chart, this down day was a little bit scary because it was underneath the line. It typically scares a lot of seals and a lot of the bait. The sharks love it because outside the line is where the sharks love to feed. And so here we were outside the line, and boom, pull back, go to the moon. There's the bounce 4. It met the bounce 4 with the gap up, actually, and continued onward. Look at that. What a beautiful play. And then, as you may see, clearly we are at a decision point, a big one. 1, 2, 3, 4, and here we come. Bang. Today, we just hit the bounce 5 line. What I'd really like to do, let's drill into this line here, and let's talk about it, because some of you are going to say, oh, man, I got to enter this. I want to get involved in this, and it's worthy to be entered, but let's look in a little bit closer. Remember the rules of the Bounce 5 channel strategy: at or beyond the line. If you were fortunate enough today to get it at the line, if you were there on time and you picked it up at the line, blessings to you. You just picked up a beautiful little move that, let's see here, 2,780. Right now we're down to 2,770. You've got a 10-point gain, and so you already have a little bit of a buffer. You're in the positive, and make this a little bit bigger. So there's your positive move. Now, tomorrow, the market can do multiple things, but of course, tomorrow, it could start heading down. What a great candlestick I drew. Okay, so we could start heading down. Just come into agreement, hit, and start heading down towards the bounce 4 target. 78% success rate of hitting at or beyond the line and having it come down, turning around and getting you in positive territory. The 78% does not include getting you all the way to the bounce 4, but it gets you into a free trade. At that point, the market will decide on its own, with or without you or I, whether it's going to come up, hit, everyone goes into agreement, and it just starts tumbling, selling off. Or the market can hit, as it did today, pull back, and then tomorrow it can try to go up, bang, and bust up over this resistance line. It could do that tomorrow. Or another thing that happens, sometimes a market just comes right on up and it just pierces through. We call that a hot knife through butter. It did not do that today. It has been a 10-point success bounce off of this line. So we do know that there are some sellers that are interesting here, and there are some buyers that were interested in getting out at that line. They wanted to optimize their trades, and so they sold to exit. That's where a lot of these exits, or a lot of these 10 points worth of selling took place, was because of this line. Sellers entering, buyers exiting. Now tomorrow is another day. If you were at the line, you are currently in positive territory. If it starts marching back up against you, my recommendation is set a stop, get out with a small gain, and let it come back up, and let's see, does it come at, or does it this next time, does it go beyond the line? So we're looking at a beyond the line area, and then we're looking for big sellers to attack beyond the line. If it gets out beyond the line, you have another opportunity to enter short on this bounce 5 with a hopeful of heading down. Remember, 78% success beyond the line of this market pulling back down inside the line. Okay, so those are pretty good odds. And I call that 78% just based on 17 years of doing this and playing it and watching it over and over, cataloging, spreadsheeting many of the plays. Okay, so, but as we're looking here, this thing started back in April, 1, 2, 3, 4, and it has been a real rhythmic move. So it's very, very possible we may get a move from the 2780 high, bounce 5, all the way down to the 2600 level, bounce 4. That's the target. If the thing starts falling off, you can call it news, you can call it Iran, you can call it whatever you want, but it is rhythm in motion, and it would have probably headed that way with or without the news story. They will give credit for the market coming back down. Remember, markets are they move in rhythm. That's what they're interested in. Okay, and bigger picture, of course, remember we were in a crack run all the way up through last year, and then we had a 1, 2, 3, 4, bounce 5 bounce 5 down, pull back, and it actually came back and hit a lower low and fulfilled that right there. It fulfilled the lower low. But right now what we're looking for is this market going to continue? Is it going to try to hit lower lows? This move could come down, challenge 2600, and may keep trying to break down new lows. But one thing that I'm not sure I saw it before until this week is that when this thing failed and turned off the crack run, right, that we had coming up for such a long time, we fell down, it pulled back, and immediately went down and broke new lows. It's already fulfilled that the crack run loss should roll over to new lows. Since that, we have not hit new lows, and I want to just make a correction here. It is possible, because it's already hit its low, it's possible there are no more lows to hit in this market. That is a possibility. We now have moved not in, there's no crack run taking place. We're moving in rhythm. So up, down, and that is the rhythm that we're looking for. So it's very possible this could come down to the 26 and then turn around, and we could start building another channel to the upside or the downside for another move to the upside. Okay, with that, we're going to call it a short class today. But what I wanted you to see for sure is right now we are here this weekend coming up. This is Thursday, so tomorrow in the market we have an opportunity here to take a look. If you have not entered the market yet, you may want to try an at or beyond the line, okay, entry if this market will come back up and give us that entry point. Otherwise, today was the day to be looking at it and drawing your lines successfully. You would have seen a few days ago that we were marching with this bounce 4 up to the 5. We were marching up to this area, so you knew it was coming, and now we time the entry perfectly if possible. I'm looking for an outside the line. I hope it'll come up there and give me an outside the line entry short for a move back down. Don't know that I'll get it, but that's what I'm looking for tomorrow on Friday. Okay, my friends, real quickly on the major weekly, just a little bit different time frame. We know here on the weekly, all the way back from 2009, the big horrible fall of 2009. 1, 2, 3, 3, 4, and then 5, 5, 5, 5, 5. And here we go. We're back up way over. Remember what happens to Bitcoin, what happens to markets when they go straight up in the air. Many times they run out of fuel and they come down hard. So don't be surprised what you see in the future here on the stock market. Not that it has anything to do with jobs or Trump's approval rating or anything going on in Washington. It has to do with the dollar. It has to do with the stock market going straight up vertical in the air. Those things are not supposed to happen without strong repercussions in the future. That's probably what we're going to see in the future. Okay, so what are we seeing here on the weekly? You saw a daily. You saw the daily, but on the weekly, 1, 2, 3, 4, and now we're marching up. We may get some bounce around in here, but eventually over 2,800, looking to hit a big bounce 5 up here in this zone and possibly break a new high. Is it possible this could be a cup and a handle play? Yes, it's very possible. We'll wait for seeing how it positions itself. But this is the weekly bounce 5 channel, which matches actually, if this thing were to keep going up towards this weekly bounce 5 line, we would see why then it would want to pierce, pull back, and then keep going higher off of this daily. We would see a reason for that. Now, I'm not sure if this one will give me an option, but if I pulled this, if I pulled this line all the way back, there you go. Now you can see basically what we're seeing on the weekly. So we have a smaller chart ready to bounce off right now. It's bouncing, and we have a larger bounce 5 channel above. And we have an all-time stop market high sitting right up here, coming up on the 2,900 point. Market is trying to get up there. Yes, in perfect rhythm, it should come back down and then try to come back up again. We'll see what the rhythm says here on Friday, possibly this next week. With that, I'm going to say good night. It's a short night, and we'll be back hard and strong this next week, taking a look at what happened here on this daily chart. Okay, God bless you, and we will see you again this next week.